All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Wednesday, everybody. Today is April 2nd, 2025. Happy Liberation Day. Do you feel liberated? I don't particularly feel liberated this morning. Liberated from a few extra dollars in my wallet, maybe because tariffs are coming. And you may have heard this. Tariffs are inflationary. So yeah, it's Liberation Day. It's Tariff Day. And you know what? Well, what now? Now what? Nobody knows. Nobody knows. How do you gauge what the market is going, or how the market is going to react? How do you gauge that if we don't have any idea what the market is even going to be reacting to? Because it's Tariff Day and we still don't know what the tariffs are going to be. As late as yesterday, they were floating, how about maybe now like this 20% blanket tariff across the board? We still don't know what they're doing. As a matter of fact, they're holding meetings today as we speak, figuring out what tariffs they're going to put. You know, like I was a procrastinator in college. Like I was that guy that was cramming at the last minute before the test. You know, I was scrambling to finish my homework right as the teacher walked into the classroom. Oh, crap, just answer the last few questions quick, get it done. But you know what? I wasn't planning the world's largest economy. I was just trying to manage a C+ in algebra. Maybe, just throwing it out there, something as important as this, maybe we don't wait till the day it's due to figure out what we're putting down. Guys, like, I get it. Trump does things differently. He's unorthodox. He's an outsider from Washington. He's very much shoot from the hip. But holy crap, with this tariff thing, they are taking that to a new level. And look, markets above all else crave certainty. And the only certainty right now is uncertainty. And so the markets are not happy at the moment. Now, maybe the tariffs come out and it's this watered down, neutered version and the market rips higher. Maybe the tariffs come out and it's, oh my God, hide your kids, hide your wife, and the market pukes. We just don't know because we have no idea what he's going to do. Now, we do have some clues as to when it will happen during the day because Walter Bloomberg was nice enough to post President Trump's schedule today. So we'll look at that and figure out what are the big inflection points when you want to be watching your screen during the day. Also going on today, or should I say yesterday? Yesterday was the greatest April Fool's Day ever, and it had nothing to do with any of the jokes that I saw online. I don't think any of them were even meant to be jokes, but they were jokes. In particular, 3 IPOs or recent IPOs yesterday. Let's start with CoreWeave, up 42% yesterday. CoreWeave ripped higher. Best April Fool's Day joke I've ever seen in my life. Did the financials of CoreWeave improve yesterday? No. Did CoreWeave become any less of a financial ticking time bomb? No. Did their debt get any smaller? No. So why did the stock rip 42%? Might have something to do with options started trading yesterday. Look, the mechanics of shorting IPOs, I really don't know enough about this stuff to tell you how that results in a 42% rip in one day. All I can tell you is this company is dead money. It is designed to fail, and it will fail. It's only a matter of time. But Kathy Wood is buying CoreWeave. I don't know if you heard that one. Yeah, congratulations, Kathy Wood. Apparently, they're launching the new ARK Exit Liquidity Fund ahead of schedule because Kathy took out a admittedly small position yesterday in CoreWeave stock. Newsmax. Somebody mentioned Newsmax yesterday in the chat on the stream. OMG, 180% rip yesterday for Newsmax. It's now worth more than Fox News, even though its revenue is like not even 1% of what Fox News takes in, and Newsmax is not profitable. Nosebleed valuations, that one is set for a big-time drop. That just got way too ahead of itself. And another one, this one, the icing on the cake for your April Fool's Day IPOs, Watton Financial. And you're like, who's Watton Financial? Watton Financial is this Hong Kong brokerage and fintech platform that went IPO on the NASDAQ. It was a $17.5 million IPO. It was very small. It ripped 400% yesterday. And the reason why I mention this is because the ticker symbol is WTF for Watton Financial. So on April Fool's Day, WTF rallies 400%. And maybe there's some symbolism about the current state of financial markets buried in there. I don't know. I'm not very perceptive about these things, but you guys take what you want from that information. But WTF stock up 400% on the same day. CoreWeave rallied 42. Also going on this morning, guys, we've got China is restricting investments in U.S. Chinese companies not allowed to invest in the U.S. anymore. This is obviously a retaliation for the tariffs. It's kind of a weak sauce retaliation because China already has very intense capital controls on how much money is allowed to leave that country and invest in the U.S. anyway. For example, in 2023, there was only $6 billion of Chinese company investments in the United States. So it's kind of a pretty weak retaliation in the tariffs. But it is interesting because my moderator, Mish, raised a very good point this morning. What about the housing market? Now, we've heard a lot about how Chinese investors are buying up entire streets and things like this around the country. Some of it is a little bit conspiracy theory-ish. Some of it is legitimate. We don't really know the full extent of it, though. But what if this ban on investing in the U.S. were to take it a step further and go to forced divestiture of U.S. assets? Well, then you're talking U.S. Treasuries potentially vulnerable to that and U.S. housing, because we've got a very illiquid housing market. And if China were to just decide, you know what, we're going all out scorched earth economic warfare in the United States, and they forced all those Chinese citizens to dump their U.S. real estate holdings, well, in an illiquid market, probably wouldn't be able to absorb that. They could potentially lower home prices in certain markets. So keep an eye on that story. We've also got a former governor of the Bank of Japan who just left the board, is now hinting that the BOJ may hike in May, assuming tariffs don't set the whole world on fire, economically speaking. So Japan's kind of hinting like, unless the stock market crashes, we're going to hike in May. And we've got a whole bunch of economic data came out to round out the show. We got mortgage applications, JOLTS, job quits, ADP private payrolls, and GDP now. Oh boy, GDP now, it just keeps getting worse, massively worse. Kind of makes you wonder, like, yeah, times have always been tough. The economy has been rough all along, but what changed? Why all of a sudden are they calling for the biggest decline in GDP like since the GFC? A little suspicious, that data dropping like so much off a cliff. And it's not just gold, all right? Yes, gold is contributing to it, but that's not the only thing that's happening here. We got a lot to talk about this morning, guys. Why don't we shrink my big melon of a head and let's see what's going on in markets? And this is the part of the show where I ask you to please hit that like button. And if you're new here, hit that subscribe button so you can come back and have your coffee with the melon heads every day, because we do this one every business day. And right now, the S&P is down by about 55 points ahead of the opening bell, 1% lower on Liberation Day. We've got the Dow is 310 points lower, 0.75% down, and heading lower as we speak. And the NASDAQ is leading the way lower, off by 1.25%. 244 points in the red for the tech-heavy NASDAQ. So stocks are down across the board to ring in Liberation Day. The dollar index right now, DXY, is off by 23 basis points at 103.99, back below that 104 handle. Keep an eye on the Dixie today, by the way. Tariffs may move this chart one way or another. We'll see what happens. And the bond market, we've got yields are falling. Keep in mind, guys, that means bond prices are rising. So a little bit of risk off going on in markets here as they sell stocks and buy bonds. The 30-year Treasury, 4.481. That's down 3.5 points. The 10-year is at 4.119, also down 3.5 points. The 2-year, meanwhile, is off by about 1 point, 3.854% for the 2-year. And the 1 month is down by about 0.5 point, 4.309. Looking over at the commodities board, we've got a kind of a mixed bag here. Gold is positive, just barely, $3,125 for spot gold. That's up by about $1.50 this morning, or 0.05%. Spot silver, meanwhile, is down about a quarter, $33.81. That's off by about 0.8%. We've got copper is higher by 0.7%. Platinum and palladium both down by about 0.6%. And even oil is down this morning, off by about 34 cents for May WTI futures, which are trading at $70.86. Some things to keep an eye on in the oil market. We have this one this morning. Kremlin says Caspian pipeline oil export infrastructure restricted after Ukrainian drone attacks. Now, I thought we had reached an agreement that we weren't going to attack energy infrastructure anymore. It looks like that got thrown out right away. But the other point is here, guys, oil, a lot of oil flows through this Caspian pipeline. It's a little more than 1 million barrels per day, almost 5% of global supply. So keep an eye on this story. It could add a little bit of supply pressure to the oil markets. Also, I don't have any articles queued up about this, but watch what's going on in the Middle East, guys. Hamas and Israel are back at it again. The Houthis and the Navy are going at it over Yemen. And we are sending a second carrier group into the I don't know where, I think the Indian Ocean is where they're actually destined for, but a second carrier group, that makes 2 now. And a fleet of B-2 Spirit bombers has recently been deployed to Diego Garcia. It's all about posturing towards Iran. President Trump has threatened to hit Iran if they keep backing the Houthis and supplying them with these missiles that are being shot at civilian and military ships. Yeah, the Strait of Hormuz, that's back in play now. So oil markets could be noisy for the next couple of weeks. Looking over at Bitcoin, we've got Bitcoin is down a couple $100 this morning, $84,896, still hanging out below the 200-day moving average, guys. It's just hugging this line, waiting for direction from the market. We had a nice pop yesterday, didn't quite take us above that line. So the technicals are still looking pretty ugly for Bitcoin here. All right, now let's talk about Liberation Day. And this is from Walter Bloomberg on X this morning. It's the president's schedule for today. And these are some of the important times that you want to watch. At 9 a.m., which, hey, right now, as a matter of fact, President Trump convenes with his expert trade council to finalize the Transformative Tariff Initiative, the TTI, apparently. I don't know if that's an acronym or not. Look, they're still deciding what they're going to do. That's the takeaway there. Right now, it's Liberation Day. We've been talking about this for months, for years even. They're still deciding. That's kind of big. 11:30, Press Secretary Caroline Leavitt will preview the historic announcement. So it's 11:30. We've got the announcement before the announcement. So I guess 11:30 is going to be one of those important times where you want to be watching markets because she's going to give us a hint about what it's going to be. Now, the actual announcement, which will probably have been leaked by then at 4 p.m. Eastern time, just after market close in the Rose Garden, Trump will have his ceremony. They'll unveil their bold reciprocal tariffs, restoring fairness to U.S. trade. Sounds like a White House talking point there. At 4:30 p.m., Trump will engage with the media. That's always fun. I'm sure it will be a very civil and professional discussion among those two. 6 p.m. Eastern time, the administration officials will brief industry leaders on implementation, ensuring seamless execution. Now, that's going to be a big one there at 6 p.m. We're going to figure out how are they actually going to do this. Is this going to be an administrative CF? Is stuff going to pile up at ports while paperwork gets done? Or do they actually have a plan to get this stuff done efficiently so they can pay the tariffs and get the stuff moving? So 6 p.m. will be important as well. And then they're saying that 8 p.m. global markets respond to the impact of America's renewed strength takes hold. That's Japan's stock market opening at 8 p.m. is what they're talking about there. So these are some of the important times to watch during the day throughout today. But the takeaway, guys, is they're still figuring this out. I mean, they're still doing the homework, right? As the professor enters the classroom. Who does that, right? All right, now let's talk about yesterday's WTFing. First of all, this one, CoreWeave stock, 42% rip yesterday at 52.55, back within the price range of the original IPO, albeit still at a scaled down version. This thing was up for no reason. There was no news about CoreWeave yesterday at all. It's up a fraction of a percent again this morning. I did find this interesting story. Cathie Wood defies CoreWeave IPO slump as ARK snaps up $3.6 million worth of stock in the NVIDIA-backed company. So for all of you Cathie Wood followers out there, I guess you got that one going for you. I will not be joining Cathie in her investment, as you may have surmised. We also had this one. Newsmax IPO is a historic one on Wall Street. Its valuation is at nosebleed levels too. This Newsmax IPO was crazy. Somebody mentioned this in the comments yesterday, but you really got to appreciate the numbers here. The Newsmax IPO is one for the record books. Priced at $10 per share, the cable TV company closed its first day at $83.51 and its second day at $233. All right, in 2 days, it went from $10 to $233. That's some GameStop level performance right there. That's after rising as high as $265. That left the stock up 2,230% in the first 2 days of trade on the New York Stock Exchange. Look, this is like one of the best IPOs in history. Now, Christopher Rudy, Newsmax CEO and longtime ally of President Trump, has stock valued at over $9 billion now. The right-wing TV outlet is now worth more than Fox News parent Fox Corp, which has a market cap of $25 billion. Fox shares similar ownership to News Corp, which owns MarketWatch and Dow Jones, i.e. Rupert Murdoch. These meteoric gains leave Newsmax valuation at truly nosebleed levels. And in pre-market trade on Wednesday, shares were trading hands at $183, reflecting a retreat of 21%. Charlie Bolello, the chief market strategist at wealth management firm Creative Planning, pointed out its market cap at $32 billion is higher than 235 companies in the S&P 500, and its trailing 12-month sales of $156 million are not higher than any of those companies. In fact, its sales were 78% below the company with the lowest sales among the S&P 500, he added. So, guys, Newsmax is set for a meteoric plunge here. It's down about 20% ahead of the opening bell. I don't know what's going on here. Did the apes grab a hold of this one? Is there some kind of gamma squeeze going on? But Newsmax will not be at these levels long, not without like a 100-fold increase in revenue, which I just don't think is happening for a cable news outlet. Also going on to just put the icing on the cake here, guys, Watton Financial Limited ordinary shares, ticker WTF, went up 400%, 396 and a quarter to be exact, 396% higher on April Fool's Day, rounding out this trip through IPO fantasy land. I mean, you just got to admire the beautiful symbolism of it all. WTF up 400% on April Fool's Day. Perfect analogy for this market. All right, let's talk a little bit about what's going on in Japan, because right now everybody's like tariffs, but we do have these other things going on in the market. An ex-board member who just left the BOJ sees a chance of a May rate hike. Now, this is important because ex-board members, especially this guy who just finished his term, he's now kind of like a Nikki Leaks. He's a mouthpiece for the BOJ now that he's no longer subject to any of these gag orders. A former Bank of Japan board member who just finished his term said that unless U.S. tariffs trigger global market turmoil, the central bank could raise its benchmark rate at its next policy meeting, given Japan improving inflation dynamics. Now, this is important. They're saying unless tariffs trigger global market turmoil. So the Bank of Japan is saying we still prioritize our stock market over normalizing monetary policy. That's pretty important. That means they're going to keep this bubble inflated. They want to hike, but not at the expense of stocks. I would probably vote for a rate hike at the May gathering if proposed, said Seiji Adachi, I'm sure I butchered that name, on Wednesday in his first interview following the end of his 5-year term last week. It's probably better to move now if the financial market is calm. Adachi's comments come at a time when market speculation over a hike at the May 1st conclusion of the next meeting had diminished due to intensified concerns over the potential hit from U.S. tariffs. Still, the state of inflation and other economic metrics in Japan suggest the central bank could possibly make a surprise early move, according to the most recent member to leave the BOJ's board. And it's worth keeping an eye on the USD JPY chart. We watch this one a lot here, guys. Look, we were kind of in this bear flag pattern here, right? We had this big decline in USD JPY. That was the Japanese yen strengthening. We got almost back towards levels around that August 5th panic. Now, luckily, we didn't quite go that bad. And then we entered this bear flag pattern, this little consolidation, right? That is your classic bear flag. And it looks like now we have broken down out of that one and we are resuming lower on USD JPY. And I always watch this chart because this is very important for that yen carry trade. There's a lot of people out there who borrowed yen, converted to dollars, and bought U.S. risk assets like tech stocks and Bitcoin with them. Bitcoin's not really a U.S. asset, but you get my drift there. So if the yen were to strengthen too far, too fast, we could see a very rapid unwind, a disorderly unwind of the yen carry trade. Shout out to Michael Gayed, who has been calling for this one for years. Also going on this morning, China restricts companies from investing in the U.S. as tensions rise. So we've got shots fired in the tariff war here, although this is kind of like it's like a little 22. It's kind of a small shot fired, maybe shooting at a squirrel here. China has taken steps to restrict local companies from investing in the U.S., according to people familiar with the matter, in a move that could give Beijing more leverage for potential trade negotiations with the Trump administration. Several branches of China's top economic planning agency, the National Development and Reform Commission, have been instructed in recent weeks to hold off on registration and approval for firms that are looking to invest in the U.S., the people said, of course, asking not to be identified, discussing sensitive issues. While China has previously placed restrictions on some overseas investments for reasons linked to concerns about national security and capital outflows, the new measures underscore tensions playing out between the world's two biggest economies as Donald Trump ramps up tariffs. China's outbound investments in the U.S. totaled just $6.9 billion in 2023, according to the latest available figures. There's no sign that existing commitments by Chinese companies in the U.S. and elsewhere, or China's purchases and holdings of financial products, including U.S. treasuries, would be affected, the people said. It's unclear what prompted the NRDC to halt the process of applications or how long the suspension might last. It's pretty obvious this is tariff retaliation that's going on here. So China is not just sitting back. It's also worth pointing out that Israel announced yesterday they were canceling all tariffs on American goods. You know, on the surface, that looks like a win for the Trump administration. It's also worth pointing out, though, that Israel had very few tariffs on American products. It was like 1 or 2% of their imports. So that was more of a symbolic gesture than anything. But this global back and forth, it is underway already. And we still don't know what they're back and forthing about. They're still in the meeting right now talking about what the tariffs are going to be. So, you know, again, no hurry, guys. You know, the whole world's waiting. No hurry. Please take your time. All right, let's talk about the housing market, because that China story about, you know, not investing in the U.S., if that gets worse, it could turn into divestiture of U.S. assets. And the housing market is one area that would be vulnerable to that. And the housing market continues to be very illiquid this morning. Mortgage Bankers Association mortgage applications data just came out, and mortgage apps in the U.S. declined by 1.6% for the week ending March 28th, extending a 3-week losing streak, according to latest data from the Mortgage Bankers Association, following a 2% drop in the previous week. Refinancing applications fell 5.6%, hitting a 5-week low. Now, that's important because refinance applications are dropping, but refinance rejections are at an all-time high as well. So the refi market is in big trouble here. Meanwhile, applications for a new home purchase actually rose 1.5%, marking their 6th consecutive weekly increase and reaching a 9-week high. So there has been some home buying going on. Meanwhile, the average 30-year fixed rate mortgage edged down slightly to 6.7% from 6.71. Also going on this morning or yesterday, we got jolts. United States job openings. The number of job openings in the U.S. decreased by 194,000 to 7.568 million in February. That's versus 7.63 million expected. So it was a miss low for the JOLTS number, and that's following an upwardly revised 7.762 million for January and below market expectations. So here is your job openings in the U.S. You can see we had a little bit of a decline. Now, the important thing is to look at this 3-year trend here. Yep, we've been declining this whole time as the Fed hiked rates and the Great Resignation ended. We've seen this come down significantly. Then we had a little bit of a blip here. Looks like we're resuming our downward trajectory. I remain convinced that JOLTS is no longer a very reliable indicator, though, because of the work from home trend, duplicate postings, ghost job postings that are very common. So I really don't think there's this many job openings in the United States, even if they do show on paper. Meanwhile, the job quits number got worse. The number of quits in the U.S. fell by 61,000 to 3.195 million in February from a downwardly revised 3.256 million. Quits is also below expectations here. Now, the quits rate, this measures voluntary job leavers. Now, voluntary job leavers going down means laborers, people earning a wage, have less confidence in their ability to find a job elsewhere. So again, these two data points, the JOLTS and the job quits, this is reflecting a weakening in the labor market. Now, this is very important because we got that non-farm payrolls is coming out on Friday. That's a very important statistic. Now, meanwhile, this morning, we got ADP private payrolls, and contrary to the JOLTS and the quits data, ADP was actually pretty bullish here. Private businesses in the U.S. added 155,000 workers to their payrolls in March, following an upwardly revised 84,000 in February and above expectations for 105,000. Now, ADP is notoriously volatile. It tends to vary wildly from the non-farm payrolls. So this is just another data point. I wouldn't put too much stock in this data point, but it's a good one. The services sector added 132,000 jobs, namely professional and business services, financial activities, leisure and hospitality, information. Meanwhile, trade, transport, and utilities lost 6,000 jobs. The goods producing sector also added 24,000, led by manufacturing and construction, while natural resources and mining lost 3,000 jobs. So overall, I'd say this was a good report from ADP payroll, although I wouldn't hold my breath on this one. Friday is the all-important data point. Now, meanwhile, we got to talk about this chart here, guys. This is the Atlanta Fed's GDP Now estimate, and it just keeps getting lower and lower. This is what they're guessing the next quarterly GDP number is going to be. This is really bad here, guys. The current estimate now is that GDP for the first quarter of 2025 will be minus 3.7%, down from negative 2.8% just a few days ago. We had some things like the ISM PMIs, the manufacturing PMI came out yesterday. We also had some construction spending came out yesterday. That's dragging this down. Now, also, gold is dragging this down, so much so that the Fed added this dotted green line, the gold-adjusted GDP, because importing gold from London looks like negative GDP, even though it's not really a loss of economic activity. So the Fed is adjusting for that, but even that gold adjustment only accounts for about half of the decline in GDP. Now, look, I've been saying on this channel for a long time that the economy is not anywhere nearly as good as they've been saying, that the whole best economy ever thing of the previous 4 years was just a joke. It was never strong. It was not shared prosperity. It was all at the top. Everybody else saw their standard of living decline significantly because of inflation. And it's almost like all of a sudden, wham, the economic data begins to reflect that reality. Like instantly. Gee, I wonder what changed in the last couple of months that all of a sudden we actually have hard questions being asked about Silicon Valley and Wall Street. And all of a sudden we're actually speaking truth to power and expressing doubts about just how good this economy is. It's almost like something changed versus last year. I wonder what that might have been. Welcome back to journalism. That's all I can say, people. Welcome back to journalism. It's nice to have you guys back after years of aimless propaganda. I don't know what else to say. But guys, GDP, not looking good. The U.S. is, in my opinion, we've been in a recession since 2022. It's about to be official. It's going to take a few months to get there. Technical definition, 2 consecutive quarters of negative GDP. This will be one. So it's going to be a few months before we officially enter a recession, but I think that's unavoidable at this point. And I just want to say thank you so much to Pandemonium Paladin. That is one heck of a name, who gifted 5 Nobody Special Finance memberships. Thank you so much, Mr. P, for doing that. I appreciate that. Guys, if you got one of those memberships from Pandemonium Paladin, be sure and let him know you are grateful in the comments. Thank you, sir, for supporting the channel. And Hunt and Cover, what's going on, sir? Thank you so much for being a Melonhead for 13 months. He says, welcome back to our its, referring to Nan. Yes, welcome back, Nan. And M&J are both back with us. Our channel mods have returned from a brief hiatus. Thank you, Nan, so much for the work you did. Nan was out doing tornado relief work. There was some very damaging tornadoes struck the Midwest a couple of weeks ago, and Nan and her group were activated. I believe Grindstone Ministries was the name of that. They were activated to go help out. So thank you so much for everything you have done, Nan, and welcome back. We missed you very much. Thanks again, Hunt and Cover, for supporting the channel. Armando Raya says a whole lot of stock market mumbo jumbo, if you ask me. I'm not sure where that came in during the stream. Okay, 9:09. That was about 10 minutes in, the whole stock market mumbo jumbo. Probably talking about the IPOs and all of that ludicrous, like the WTF rallying 400%. Newsmax. I don't know what on earth is driving Newsmax shares so high. It's got to be some kind of technicality. Somebody was caught short the thing, the apes, or something going on Reddit. Maybe I'll dig a little further into that one. But yeah, yesterday was a joke, literally, what happened in the markets yesterday between CoreWeave, WTF, and Newsmax. It's a joke, and the punchline is us. Maybe we're the punchline here. But thank you very much, Armando Reyes, for supporting the channel. And Armando says, welcome to the rebirth. Reap the whirlwind, Liberation Day. I don't know if that's so much rebirth or afterbirth. I'm not sure what that is, but whatever it is, don't step in it. That's the only thing I can tell you. I don't feel particularly liberated today. I don't know. Maybe I'm wrong. You guys let me know. Who feels liberated? Look, the tariff thing. I am not in favor of tariffs. I get why he's trying to do that. I understand what his goal is. The problem is, to do that, he is inflicting pain on us. All right. And there are people out there who, for political reasons, are trying to act like that's not the case. It is the case. All right. Let's face facts. Let's be realistic about this. This is a tax on us. We will pay more. So when you hear people bragging about how much money the government's going to take in, it's a tax increase on you if you buy those things. Now, maybe in the long run, the benefits of these tariffs will be reshoring of manufacturing and quality jobs, and maybe the restoration of the middle class, where, God forbid, one parent wants to work, the family could make it happen. Maybe, just maybe, that comes out of this. That's going to take years to get here, if at all. The pain gets here tomorrow. So that's important to keep in mind, guys. Be realistic about what's going on. Thank you very much, Armando, for supporting the channel, sir. And thank you to JJ Watt, who says Dave & Buster's Q4 earnings call on 4/7. Lots of investment firms dumping ahead of the call. Family dining and hospitality is dead. Look, correct me if I'm wrong, but I'm pretty sure Dave & Buster's is another one of those private equity CFs. I don't know that for sure, but keep an eye on that one. Look, when I was in college, I used to love going to Dave & Buster's in Philly. My college wasn't too far away from there. But that was the kind of thing you could do like once or twice a year because it was so freaking expensive. And that was 20 years ago, 25 years ago. I mean, I can't imagine how much to actually like go to Dave & Buster's, eat dinner, have a few drinks, and play some games. Like, you're talking a second mortgage on your house now for something like that. So I don't know how a company like that survives in this environment, to be honest with you. So thank you very much, JJ, for pointing that one out. We'll see what happens with Dave & Buster's. Appreciate the support of the channel. Everybody else, enjoy your Liberation Day. Liberated from what, I could not tell you, but it's going to be a heck of a day. Watch that schedule. Who knows what the tariffs will hold? Thank you so much, everybody, for your support of the channel, both the super chats as well as my magnanimous melon heads on Patreon and YouTube. You guys rock. Thank you so much. Links down below to all that good stuff, should you feel so inclined. Don't forget that like button and subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.